In a groundbreaking move for the cryptocurrency market, tokenized SpaceX shares launched today across multiple platforms, marking a significant shift in how traditional assets can be traded. This could redefine investment opportunities in crypto. Here's what you need to know. In the wake of today's launch, the financial landscape could shift dramatically as several potential scenarios unfold. The introduction of tokenized equities and synthetic share products marks a significant evolution in how assets are represented and traded. This innovation merges traditional securities with advanced blockchain technology, creating a unique intersection that invites both opportunity and scrutiny. Regulatory bodies are expected to intensify their oversight concerning custody arrangements, redemption rights, and the overall regulatory classification of these offerings. The complexity of tokenized products raises questions about investor protection and market integrity, which regulators will need to address swiftly. As adoption continues to grow, tokenized stock products may catalyze intense competition among exchanges and decentralized finance (DeFi) platforms. This competition could lead to innovative trading solutions that better serve investors, enabling seamless access to a wider array of assets. Furthermore, the blending of traditional finance with crypto-native infrastructures may disrupt existing market structures, prompting a reevaluation of trading practices and regulatory frameworks. The ramifications of this shift could redefine how the average investor engages with financial markets, potentially democratizing access to investment opportunities. Experts emphasize the need for vigilance as these developments unfold. Investors should closely monitor regulatory updates and market reactions, as these factors will play a crucial role in shaping the future of tokenized assets. The evolution of this market segment could bring forth new investment strategies and risk management techniques, fundamentally altering the investment landscape. As we stand on the cusp of this financial revolution, it is clear that the integration of tokenized assets has the potential to create a more inclusive and dynamic investment environment for individuals around the globe. The coming months will be pivotal in determining the pathways for growth and regulation in this burgeoning market. The recent launch of tokenized SpaceX shares by multiple platforms marks a significant milestone in the evolution of financial markets. This development reflects a broader trend toward tokenization and on-chain financial products that have been gaining traction over the past few years. As cryptocurrency trading matures, there is a growing demand for sophisticated financial instruments that can attract traditional investors seeking new opportunities. Tokenization facilitates fractional ownership, enabling enhanced liquidity and making elite private company equity more accessible to a diverse range of investors. Historically, cryptocurrencies were viewed primarily as speculative assets, often criticized for their volatility and lack of intrinsic value. However, this perception is changing as institutional interest in digital assets continues to rise. Crypto exchanges are evolving beyond mere platforms for speculative trading and are increasingly focusing on real-world asset trading. This shift signifies a desire to bridge the gap between traditional finance and the emerging blockchain ecosystem. The simultaneous unveiling of tokenized equities demonstrates not only the feasibility of trading these assets, but also their desirability among investors. The impact of this transformation is profound, as it opens new avenues for both retail and institutional investors. They can now diversify their portfolios with previously inaccessible assets, enhancing their investment strategies. The tokenization of high-profile companies like SpaceX serves as a potential catalyst, paving the way for similar offerings in the future. Looking ahead, the integration of traditional assets into the cryptocurrency space is expected to accelerate. As regulatory frameworks become more defined and investor confidence strengthens, we can anticipate a surge in tokenized products across various sectors. This convergence of traditional finance and digital innovation is poised to redefine investment strategies, making asset trading more inclusive and efficient in the coming years. The recent launch of tokenized SpaceX shares marks a transformative moment for both cryptocurrency investors and the wider financial landscape. This initiative represents a significant evolution in how digital assets are integrated with traditional financial instruments. by allowing investors to purchase shares of a major private company like SpaceX through a tokenized format. This development positions cryptocurrency exchanges not just as platforms for speculative trading, but as serious competitors in the realm of traditional asset management. Historically, investing in private companies has been restricted to accredited investors or institutional players, often requiring substantial capital and navigating complex regulatory environments. Tokenization democratizes access by enabling fractional ownership and offering 24/7 trading capabilities. This shift could potentially lower barriers to entry for retail investors, providing them with opportunities previously reserved for the elite. However, the structural design of these tokenized equities raises critical considerations regarding investor education and risk management. Fully backed tokenized equities, which represent actual ownership in the company, contrast sharply with those providing synthetic exposure, which may come with different rights and risks. Investors must navigate this new landscape with a clear understanding of what they are acquiring. The diversification of crypto products introduces both opportunities for growth and complexities that could lead to confusion among less experienced investors. The implications of this development extend far beyond individual portfolios. As traditional finance and cryptocurrency markets increasingly intertwine, the dynamics of investment strategies may evolve significantly. Financial institutions and regulators will be compelled to rethink their approaches to oversight and compliance in light of these innovations. The tokenization of assets could reshape how capital flows through markets, potentially influencing liquidity and valuation models. Looking ahead, the success of tokenized SpaceX shares may serve as a blueprint for future initiatives in the financial sector. Other companies could follow suit, leading to a proliferation of tokenized assets across diverse industries. As this trend gains momentum, it is crucial for investors to remain informed and engaged, ensuring they are equipped to navigate the complexities of this new investment frontier. The future of finance may very well hinge on how effectively these innovations are embraced and understood. On June 13, 2026, several prominent cryptocurrency platforms unveiled tokenized SpaceX shares in conjunction with the company's highly anticipated IPO. Platforms such as Ondo, Kraken, and Backpack rolled out live products that are backed one-to-one by actual SpaceX shares, marking a significant milestone in the evolution of both industries. In a notable addition, Hyperliquid introduced a pre-IPO perpetual contract, providing synthetic price exposure rather than ownership of the shares. This simultaneous launch across multiple venues underscores the growing integration of cryptocurrency with mainstream capital markets, reflecting a shift in how investors perceive digital assets. The context surrounding this event is crucial. SpaceX, a leader in aerospace innovation, has long captured public interest and investment. Its upcoming IPO is seen as a pivotal moment in the tech industry, potentially raising billions to fund ambitious projects like Starship and Starlink. By tokenizing shares, these platforms are not only democratizing access to high-value assets, but are also leveraging blockchain technology to enhance transparency and security in trading. This move aligns with a broader trend where traditional assets are increasingly being digitized, blurring the lines between conventional finance and cryptocurrency. The impact of this launch is profound. It signals a maturation of the cryptocurrency market, as established financial platforms embrace innovative solutions to attract a wider audience. Investors now have the opportunity to engage with high-profile stocks in a more flexible manner, allowing for fractional ownership and real-time trading. This development could pave the way for more companies to explore tokenization as a viable route for capital raising, while potentially transforming how IPOs are conducted in the future. Furthermore, it could enhance liquidity in markets that have traditionally been less accessible to average investors. Looking ahead, the implications of tokenized assets may extend beyond just SpaceX. As regulatory frameworks evolve and more companies consider this approach, we could see a significant acceleration in the adoption of blockchain technology in finance. This shift will likely reshape investment strategies and diversify portfolios, ultimately fostering a more inclusive financial ecosystem. The next few months will be critical in determining how traditional investors respond to this new paradigm, setting the stage for the future of capital markets. As we explore the future of tokenized assets, how do you think this will reshape investment opportunities? Share your predictions in the comments below, and don't forget to subscribe for more in-depth analyses.